Hello everyone, today's video is all about investing and specifically real estate investment trusts or REITs. Now remember, I'm not giving specific investment advice here, I'm just telling you about a certain type of investment which you may or may not choose to do, but it's something to have a think about if you're interested A, in investing, and B, in the property space. Real estate investment trust. Now, these things have only been in existence in the UK about 15 years. I remember when they first came in. They've been around in America much longer, but the general thrust of all REITs, no matter where they are, which countries, is they are firstly to do with property, hence the RE and the REITs, real estate. So it's all about companies that own property, and the idea being that they have favourable tax status. The companies themselves pay little or no tax if they do certain things. So, as always, devil's in the detail, let's dive in. So, let's just take a UK PLC REIT. So, company invested on the stock market, listed shares, and this company may own, lease, or even develop property. And basically, for it to have this REIT status, it has to have most of its income from rent. So this is it can only really dabble in property development. Most of the income has to come from rent. And then the next rule is that 90% of the income has to be paid out to shareholders. So it can't hoard cash and do stuff with the cash. It has to pay out pretty much most of what it makes in income, 90%. And the rules say, the UK rules say, that companies who do this will not be charged any corporation tax on the profits of their business, on the rental profits. Now that's pretty terrific. So, compare that to a normal, let's just say, you may have your own property investment company, you may have a portfolio and you've structured it in a company rather than as an individual based on the relative merits of having corporation tax over income tax and things like interest restriction and goodness knows what. But the point is that you have to pay some tax even as a company. But for REITs, no corporation tax at all. So all that money comes in, there's no corporation tax, but one of the rules saying is the government says we'll give you this no corporation tax because most of it you have to pay out to the shareholders and then we'll hit the shareholders for tax. So that's kind of how it works. So no tax for the company, so better returns by and large. If you think about it, you didn't invest in a regular company that suffers corporation tax. Yes, there's going to be dividend payments, but they're after the company has suffered corporation tax. But in REITs, they don't suffer corporation tax, so you get distributions from the REITs as a shareholder of those shares, and the type of distribution is known as what we call a PID, a PID, a property income distribution. Now, this is totally different, like a regular dividend from any other type of company that listed PLC, where you normally get a dividend from BP or Shell or wherever, and it's taxed as a dividend. Dividends from REITs, classed as a PID, are not taxed as a dividend. They are treated as if they are income from property. So on your tax return, income from property. And you will also suffer what we call a withholding tax. So the UK PLC here that's paid out the distribution to you as the shareholder, let's just say you're getting £1,000 gross PID. Well, they would have already taken off £200 at source, withheld it, so you receive £800 in your pocket. And then what you would do on your tax return, you put in the gross amount for 1,000 and then take off, you work out your marginal rate of tax and then knock off the 200 quid that these guys have withheld at source. And as far as I can think of, it's the only type of dividend distribution onshore in the UK where that works, because this happens quite a bit with foreign dividends, not just REITs now, but generally foreign companies. People will be familiar. You got shares, say, in Santander, and there is Spanish withholding tax, so you only receive a part of the gross amount because the overseas tax authorities have taken some at source, and then you have to claim it back in your tax return. So a similar thing here, but this is from a UK company. So a withholding of tax from a UK resident company. So PID, property income distribution. Now, not all distributions from REITs are PIDs. Some of them will be treated as regular dividends. And what would happen is, particularly, let's say you're getting the streaming the income from here, and you're getting a return on, say, the property development arm of the business, and that would be a separate distribution taxed as a regular dividend. So, well, if you are a shareholder in REITs, like I said, not a bad investment, but I'm not giving tax advice. I'm not giving investment advice. I am giving tax advice. If you are in receipt of the distributions from a REIT, it'll say this is to be treated as a PID or a non-PID, and you've got to work out accordingly where it goes on your tax return. Now, from an investment point of view, there's all sorts of things that you can invest. So a lot of these REITs structure themselves into certain areas. So you can have a REIT that focuses just on commercial offices, storage units, warehouses, self-storage, shopping centres even, if you want to invest in that area. So different types of REITs can tend to have different types of property. And there's some really huge REITs out there. Some of the property businesses in the FTSE 100 are indeed structured as a REIT. Others, like I said, more niche and specialise in certain types of property. What else have we got to say? Oh, it's liquid. So because these things are listed on the stock market, unlike, say, a property fund, an open-ended property fund where it tends to be not as liquid if you wanted to get your money out. With these, they're completely liquid, fluid. If you want to sell shares in the REITs, there's the mechanisms of the stock market where you get your liquidity assured. You get your hands on the money if you want to sell shares in these REITs. So just something to think about there. Like I said, if you're looking at dabbling in stocks and shares, if you're doing your own stock picks within your SIP or your ISA or wherever, and you think, yeah, you quite fancy a bit of a property play, some sort of commercial property, doing it via a REIT is tax efficient, because chances are you will get a better return from the company because the company's not paying corporation tax, and there's all sorts of sectors that they invest in, so there's all sorts of choice available. But like I said, I ain't giving investment advice. So an overview there on the REITs in the UK. If you like this video, please do subscribe, and as always, I'll see you soon.